Hello and welcome to Module 6, Crypto Charts and Patterns. Now, I know that a lot of you see personality types. This would have been the first module that you would have watched. I also know a lot of the Ds will probably skip it. I'll just grab what I need to go and I'll just keep going. And the influencers go, well, yeah, I'll just run with the pack. And then you've got the city people to be going like, oh God, I don't know if this is for me. Well, I've got some good news, right? The good news is that the 10,000 hour rule applies to master anything in life, whether it be being a builder, an accountant, a solicitor, a trader, a business owner, right? It doesn't come easy. You've got to put the time in. I'm well over my 12,000 hours now. Thankfully for COVID, I spent basically most of my COVID time in the charts. And that's when I really had my breakthroughs. Now, I remember when I first started trading, and I was trading futures, and I was a member of an academy and being trained by, without a doubt, the best educator in the world. He saw something in me. I still to this day don't know. It's quite funny now because he's actually now a member. So the student has now become the master, and the master has now become the student. He took me aside and he said, Tim, I am going to teach you to read candlesticks, not charts, candlesticks and patterns. Because when you can do that and master that, you'll never work a job ever again in your life. So I spent 2 years doing a job, being mentored, sitting next to and in the live trading room with one of the best. And I'm very, very grateful. Lockie, big shout out. You are the reason why I'm here today. Thank you. Respect. Okay. When I first started in charts, and this was even before I joined an academy, I did everything wrong, right? I just didn't know what I was doing. I spent so much time, effort, energy, and money for zero results. Actually went backwards, got quite depressed, almost walked away. I'm not going to go down that pathway. So what I'm going to do is I'm going to share with you what he shared with me. So let's get started. What we need to do is start identifying patterns, okay? Now, what he did for me is I had a certain trading strategy on 1 to 100 leverage in the NASDAQ. I had a specific timeline, specific targets, and there were specific patterns. So I would screenshot those and put them above my computer screen, and I would continually look at them. So I ground into my subconscious. Remember Carl Jung? I actually reversed back. I controlled and dictated my subconscious. Whereas in the past, it was dictating me. Does that make sense? I got to learn these patterns. And when you see these patterns, you, like anyone that's trained in sports, it becomes an automatic response. So here we go with the first pattern. It's called a breakout. Whether that be a one-day chart here, I used to trade a 5-minute chart on the NASDAQ, a 1 week, a 1 month, whatever. The pattern is the pattern. A breakout, you'll see an accelerating a candle that will scream up, pull back, and then it'll start stepping up on the way through. That is very important. The next one here is what we call the stair step. Now, as you can see, that big green candle, and then it levels out at the 55th from the tip of the wick. It then consolidates, and then it starts to stair step. It's like walking upstairs, taking profit as is going. You'll see there's a red doji there, and there's a second red pullback. That is normal, that is natural, and that is healthy, right? Stair stepping is a really good entry point for those people who haven't got the personality type, the D type, to get into the breakouts or a swing trade, right? This is what's called trend trading or trend investing. Then we've got the next pattern, the J curve. I love J curves. J curves is the exponentiality. Boy, that's a big word. Basically, when it cranks and it kicks, right? It cranks and it kicks. It's quite often been stair-stepping, and all of a sudden an event can come in and you'll see these massive surges. Massive surges. It will then go into what can be potentially a parabolic movement. There's nothing wrong in entering into a J curve, even at the stage you see here, because when it goes parabolic and everyone starts foaming and it's all over the media and it's just smashing things and YouTubers are cranking and bullshit, and people just FOMO in, well, they're our exit liquidity. They're our friends. They actually pay us. They pay us their hard-earned cash, right? God bless them. And then there is the mother of all, known as the God candle, also known as an Omega candle. And that's a one-way ticket, lock and load, boom, to the moon. It just goes, right? God candles are very hard to read on the way up. They're a great candle. When I was trading on the Chicago Mercantile Exchange and we were short selling, we love God candles, because we'd always short them, because we know Fibonacci says comes back to 50 fib, maybe even down more. It's easy money, but we don't do at the Academy leveraged short selling. It is very, very complicated and very, very difficult, sort of highly emotional space. So when you know and understand these patterns and you're looking at a chart, irrespective of the time frame of the chart, you have got a huge advantage because you have an insight of what's about to happen. So now let's go and have a look at this. This is a typical crypto slumber. This is an actual coin. I'll reveal what the coin is later. Now, see that long period in the red line, right? That's tough. You don't know how long that consolidation or that slumber period is going to go for, because when something wakes up, like when something comes out of hibernation from winter into, there's a change of circumstances, and you can see highlighted in yellow in the three little red circles. What happens here is a stair step. Although there has technically been a breakout on the way through, it's a curved breakout. Now, there's certain trigger points that give value and liquidity to market. I'm going to share with those today. Those three circles there are new listings on new exchanges, and quite often in crypto slumbers, coins get listed on a tier 4. They go all the way up to tier 1. As it goes up the listings and the rankings, it gets exposed to more liquidity, more people, more media. You can see where I'm going with this. It gets more value. Now, here's the kicker. Apart from Kraken, no crypto exchange will tell you when they're listing. That's where the fun starts. So they're called trigger points. Then we can see here the beginning of a J curve, because you can see where it says trigger point, it sort of curves and it kicks on up, and you can see the parabolic movement. Then we have the gold candle, the holy grail, right? Well, guess what? A gold candle actually isn't really the holy grail. It depends on where it is in the market. Now, what happened here, and I'm going to take you on the journey of this coin. It went through crypto.com, Binance listings, another exchange listing, and that God candle happened when it listed on Coinbase. the largest crypto exchange in the world with the largest liquidity pool. It also has the largest American market. Now, Americans, sometimes they're a little bit egotistical and they're a little bit unique, right? Being polite. I've got a lot of American friends, right? We debate this all the time. But they will buy on stupid things. Oh, that looks cheap. I'll buy that for $1. They will just throw money into this, and this is what creates the God candle. Now, let's try and put some dollar values to this, because everyone thinks you make the most money on the God candle. No. In fact, it's the candle you can lose the most money. Because as you can see, as time's gone past, there was the pullback. So everyone that entered at the mid-stage of that God candle got wrecked. Never buy into a God candle, right? When everyone's doing it, walk the other way. Wait for the pullback, because they are the exit liquidity for the people that started at the stair step. So let's have a look at this. This curve was 26x. Let's do a mathematical example. $10,000 times 26, $250,000, right? But that 26x was not made on the God candle. When you look at the numbers on the side, it was only just over 2x. Where the money was made was on the stair step. So I'll give you a bit of an indication. So, for example, it might have had 6x there, 4x in the next one, and 2x on the last one. There's your 26x. However, this cryptocurrency did well over 100x. So you look at this chart and you go, well, where was the money made? Here's the answer. The money was made in the crypto slumber before it started entering the liquidity pools. Huge amount of risk, right? Huge amount of risk. Those people that were consistently buying over that period of time, and this is incredibly mentally tough. It's like buying property in a suburb every year for 10 years and the value's never gone up, right? And then you go to buy your 11th property in the 11th year. Everyone's laughing at you. You got rocks in your head. And then boom, she does 300-400%, right? That's what happens in some sectors of the property market. Knowing that from 20 years experience. So it takes a very special type of person. However, you don't have to put a lot of money in. We've got guys in hedge fund doing $50 a week, right? We have identified in hedge fund 100, 200, 500, and yes, the holy grail, we've got two 1,000x potentialities. Very low market caps, under $1 million that could go to the billions. Yes, that 1,000 could turn into $1 million. However, there's a lot of risk involved in this. So what I'm trying to educate you here, if you are a front runner and a D personality type, crypto slumbers is where the money is made, right? However, it's hard yards, really tests your mental capacity, your durability, and your conviction, right? The J curve is a good place to make the money. However, it's the stair step, right? So if you had entered in that stair step, I say halfway up, you might have got 20x. Now, we throw x's around like, it's like it's candy. The multiplier, because we don't put the percentages in there because people won't believe it. 20x, 2,000%. $1,000 turns into $20. That's an amazing return, right? It's an amazing return. So these patterns help you identify when it was a good time to enter, and also the risk cycle and the risk and reward cycle of where the potentiality of it could be going. Now, the $1 million question you're all wanting to ask, what was the coin? The coin was a meme coin, and it was on the Solana network. And this is the curve of Bonk, right? Which is now a huge community. Bonk turned people with thousands of dollars invested during that crypto summer into multi millionaires. These don't come along very often. Bonk is in one of the top two. With meme coins, you want to be in the top 2 or 3. You can be chasing rabbits and chasing chickens, and most of it comes to nothing, right? It also was front running because it was one of the first meme coins to be released on Solana, which has now become known as the meme coin casino. And yes, the figure is right. Now there are 40,000 meme coins being issued and created per day. So you try and pick a winner out of that. Good luck. Okay, now this is going to start getting really juicy and really spicy. We're going to get into some charts. Probably half of you already left by now. So those that are still here in this module, keep going, keep persevering, because this is the pay dirt, right? This is where the gold nuggets are. So here we're looking at a chart for Near Protocol, which is an exchange. It's a one-day chart. And we can see where the current market is. And we're wondering, is this a good entry point for investment? Using a Fibonacci retracement, we've identified that is actually halfway in the lower quartile. If anyone understands stochastics RSI, these will be screaming buy, right? However, there'd been a very strong green candle previous. It could go back even down to where it was before or lower. So what do you do? Well, this isn't a very clear indication. So what we've done, when we zoomed out to the weekly chart. Now, there's a lot of detail on here, so I'll explain it through. Same principle, Fibonacci retracement, seeing where, in fact, the 50 fibs are and all the support and resistance level. Then we look for the telltale signs. You'll see here, the triple bottom and the double bottom. Double bottoms are very cool because double bottoms form the W for wealth that you can see there in the blue. When that has formed, and you can see where I've got breach point, when a chart breaks through, breaches, and has 3 consecutive cycles of higher highs and higher lows, it looks like it could break through and go for a run. On a weekly chart, it's already, if you get 3 weeks of higher highs and higher lows, that's a very strong sign, right? Daily, okay, a bit more of a swing trade. Now you can see here, look at where the market is. It's actually at the bottom of a triple bottom. The W formed, the coin could not breach. It was the support left, the sellers sold down, and it's now leveled out. So we're still looking back at the one-day chart saying this could come back some more. So what do we do? So we started the one day, we zoomed out for a macro. Let's go zooming in for a micro. Okay. Let's go into the 4-hour chart. Again, Fibonacci retracement. Gotta love Fibonacci, but more to come on that. Now, you can see here where the 50 fib is, and the 50 fib is very important. Imagine a pendulum swinging left to right to left to right. It always must pass through the middle. It's called mean reversion analysis. It must happen, right? So we know it'll go down to the 50, test the 50. It could go on through or it could bounce up. Here it's gone up. It's tapped the full swing of the pendulum at the 1 Fibonacci, come back down, balancing on the 61, has touched the 50, leveling out and channeling. Now, what that says is, and when you look at those candlesticks, there is a slight movement of higher highs, moving on the 4-hour chart. What that tells us is that there is a strong possibility this will continue. The probability of going under the 50 fib down is highly improbable. So when we look at the weekly chart and we see the big macro and we see the selling down has occurred, it's now turning and going back, that's probably a very strong signal for depersonality types or swing traders to get in on that first leg up to the breach point. Once it breaches and runs, that's when the trend traders come in. And once it gets past the higher point there, you see it $8 and kicks, that's the FOMO, right? That's our exit liquidity. So if we're entering, say, for $2 and we're looking go, it's got a potentiality of 4x to 8, we can step out at 5s and 6s, you're still making good money if you are looking at a short to medium term trading strategy. Now, some of you are looking going, whoa, this is so complicated, right? Guess what? It is. There's no shortcuts. However, what I have done over time with the Academy, you cannot compress 10,000 hours down to 100 hours. What we've managed to do with our systems and processes is condense it down to 2,000. And what we teach is not candlestick analysis and charts. We teach you how to use the systems and the processes, because all the work is done for you on the back end. I.e., we don't teach you how to build a design and build a car. We just teach you how to drive, right? Okay, so let's go into some history. Fibonacci. Some of you may or may not be aware of Fibonacci. Actually, Fibonacci is not his real name. Fibonacci, his surname is he is an Italian mathematician in the late 1700s, right? He put a combination of Hindu and Arabic mathematics together and came up with what's known as the Fibonacci sequence. Wow, that sounds fantastic. I'm going to put some links about Fibonacci, the person, and the sequences in the descriptions below. Very, very cool. I mean, I've got a history research degree. I love this stuff. Long story short, there are two types of Fibonacci extensions. The first one we see here on the left, right, is what's called a Fibonacci retracement, right? What that does, we take from the top of the run to the bottom of the previous cycle, and we can work out, you'll see two lines there, a green line, the 50 fib, and a blue line, the 78. Now, the 78 fib is the testing point. When something starts to sell down, it's a support level, and buyers are coming in, it'll bounce on the 78 fib. If it gets buy support, it'll go breach and then kick on up. However, if it loses support, and you can see that big red candle, it'll drop. 50 fib retracements are very normal. They're awesome entry points, right? Awesome entry points. You can see how it's bounced on the 50 fib, got the support, came up. You can actually see the W there. For those you can see it, the W is formed. It then breaches and runs, right? The one on the right-hand side is what's known as a Fibonacci extension, where we go from the base of the previous run to the apex and the pullback of the retracement. That enabled us to forecast mathematically, which has been mathematically proven over time. Fibonacci is used in all market charts. You master the art of Fibonacci, and guess what? You watch where your results will go. Here it is showing on the one Fibonacci, which is a complete cycle. So imagine you go up to a pond and you drop a pebble. It hits and it sends out waves and ripples. As the waves get further out, the intensity starts to die off. Once we hit that first cycle, right, the one Fibonacci, it then starts to diminish. Many commodities, stocks, shares, crypto run to the one Fibonacci and beyond. So here we can see there is a potentiality of Bitcoin here going to 150 plus, right? Now, as that stair steps up, we keep resetting Fibonacci's all the time. We follow the stair steps and we keep going until we get that 50 fib pullback, right? As seen here on the retracement, that shows it's being tested. And that's when you've got to show some skill, because there is a high probability of coming back. Some of you might actually want to sell your physical, let it pull back more, and then re-enter and grow your bags. We do that at hedge fund, a little bit more technical. So what does a Fibonacci sequence cycle look like? It's here, mathematically done. Now, does that blue line look like anything you've seen before? Let me show you something. Here's a picture of Fibonacci, right? Fibonacci's are found everywhere once you know how to look for them, especially like in the human bodies. Then look at art. Michelangelo, Fibonacci. Mona Lisa, Fibonacci. The Mona Lisa is hailed as being one of the most technically perfect paintings ever. I have seen a micro analysis of all of the Fibonacci's in the Mona Lisa. It is unbelievable. Then let's look at our world. The seahorse, the shells, the galaxies, the leaves. Fibonacci is everywhere. The oceans and waves. It's energy in motion. It's movement. Once you learn how to read and to tap into Fibonacci movements and motions, it's a game changer. And then finally, even in our bodies, Fibonacci is everywhere. So I hope you've enjoyed this. It has been a bit spicy, a bit technically, got a little bit juicy. And now we've finished up with some history. Please see the description below for some more links. And I look forward to seeing you in the next module.